US stock market regulators are suing one of America's oldest and most widely used crypto exchange, Coinbase. The Securities and Exchange Commission says that Coinbase has been illegally acting as a broker for 13 cryptocurrency tokens. These are distinct from coins, which are still regulated and taxed as assets. But because tokens based on cryptocurrency blockchains offer a range of investment options, the SEC sees them closer to stocks than traditional cryptocurrencies. The news comes just days after the SEC sued Binance over misusing investor funds and misleading customers about the risk of market manipulation on the platform. The turmoil in the crypto world sent the value of Bitcoin up as investors flee more novel digital financial instruments now in the government's glare. For more on this now, let's go to Naeem Aslam, Chief Investment Officer at Zay Capital Markets in London. Thank you very much for being with us today. Naeem, we've been talking about two different issues here, right? One is the exchanges are failing to register as brokers or exchanges themselves, and two, staking programs that violate securities laws. What exactly are the allegations against Coinbase?
Right, sure. Okay, thanks for having me, first of all. Look, I think it's very important to understand one clear message from the SEC, and that is the era of wild, wild west is over. Now, traders, what does that mean in terms of the cryptocurrency space or in terms of investors and traders? Traders should understand that the SEC has a very clear stance when it comes to Bitcoin, because for them, it's a commodity. Now, everything else, what exchanges were doing in terms of staking programs and then unloading a lot of other digital currencies. And of course, with respect to Coinbase, they've been immensely careful of what kind of securities or digital tokens they wanted to onboard. But the SEC, although these exchanges will continue to say that, look, we do not have a clear regulation from the SEC. Okay, if they don't, they will move to a much friendlier location, such as the UAE or Hong Kong, especially, where a lot of these exchanges are going to. But in the United States, what it means for exchanges is that the era of wild, wild west is over. But traders must understand that Bitcoin is here to stay. This is the best news that we could really get in terms of the adoption, in terms of a more clarity from institutions, because Gary Gensler has made it very clear that they are still issuing licenses for brokerage dealers who are positioned themselves appropriately. But staking and all of other things, yes, those wild, wild west era is certainly over for now. But I'm sure these exchanges will find more novel ways to serve the clients.
Right, so Bitcoin is here to stay, but regulation is needed, right, at this point, whether we're talking about the US, I guess, but also the UAE or Hong Kong as well. And if these allegations could threaten the very existence of Coinbase, what would the impact then be for Coinbase profitability, its revenues, and ultimately Bitcoin prices?
Yeah, look, right now, obviously, the stock is under immense pressure. But if you look at if you just move away from this particular event and you look at the overall valuation, and if you look at the overall picture, the stock didn't tank like 40%. 50% or 60% yesterday. We only had a 20% of a correction, and then the stock market just saw that, okay, this is a one event which was largely expected, and Coinbase has the ability to implement right policies in order to drive business. The thing is that there is a still huge demand for Bitcoin as a commodity, as an asset class. And I think Coinbase, in comparison to other exchanges, is still very much positioned in a very, very strong place in order to serve clients.
Naeem Aslam, thank you very much.
Thanks for having me.
And now let's go to other top stories from around the world. China's exports have fallen more than expected in May, adding to concerns that growth in the world's second largest economy is slowing. Shipments abroad plunged 7.5% from a year ago to $283.5 billion, the biggest decline since January. Imports were also down around 5%, resulting in a trade surplus of $65.8 billion. The World Bank has warned that higher interest rates and tighter credit will dent global growth in 2024. The development lender said real global GDP is set to grow 2.4% next year, down from 2.7% it previously projected. The bank also estimates overall global growth will decelerate to 2.1% in 2023. And Australia's economy grew at its weakest pace in 1.5 years in the first 3 months of 2023. GDP rose 0.2% from the previous quarter as high prices and rising interest rates squeezed consumer spending. Meanwhile, annual growth came in at 2.3%, also missing forecasts. And that is all from Business Focus.